Stop scrolling right now. The universe made you find this video so you finally fix your trading. I've spent the last 2 years trading every possible scalping strategy out there, and trust me, 90% of them are just noise. It took me 3 painful years to perfect a system that actually works. Now I trade less than 90 minutes a day, no indicators, no second guessing, just one simple rule-based checklist that I follow every single day. In this video, I'm going to show you exactly how I scalp profitably step by step and prove it with real trade examples on gold and forex. This isn't about sitting on charts all day, it is about mastering one clean setup that gives you freedom and consistency. So please watch until the very end, because if you can even finish this 10-minute video, forget about trading, which will take you at least 1 to 2 years to master and become profitable. Alright, let's get straight into it. This scalping strategy is based on one simple thing: the first 4-hour candle of the day, because that candle tells you everything you need to know about the market's intention. Here's why: the first 4 hours after the market opens have the highest trading volume of the entire day. That means the high of the candle shows where sellers hit their maximum strength, and the low shows where buyers step in with the most force. It's the battlefield between bulls and bears, and once you learn to read it, you know exactly which side is winning. Okay, now here's what we do. Step number 1, mark the high and low of the first 4-hour candle. That's your opening range. These two levels will guide every decision you make for the rest of the session. Step number 2, drop down to the 5-minute chart. Because we're scalpers, we want precision, not guesses. On the 5-minute chart, you will start to see how that single 4-hour candle was built, all the tiny battles inside it. After the 4-hour candle closes, we wait patiently. In this strategy, we are not trading the initial breakout. Instead, we wait for a strong and aggressive move that breaks either above the high or below the low of that range. This is the key. Don't trade the breakout itself. We want to see the candle come back and close fully within the range. That's the confirmation we are looking for. Once that happens, we watch the next candle carefully. This candle is where we look for a break of the wick of the first candle that closed inside the range. This is what I call the reverse break get traded strategy. If you haven't heard about the original break get traded strategy that helped me pass the $700,000 funded and 6 figures payouts, make sure you subscribe and turn on notifications, because I'm going to reveal the full strategy very soon, step by step, so you can get $700,000 funded like me. Now back to today's video. By waiting for the candle to close back inside the range, then looking for the wick break on the next candle, you're basically letting the market tells you who is in control, buyers or sellers. You're avoiding the fake outs, false breakouts, and unnecessary losses. Now that we have identified the candle that closes back inside the range, it's time for the actual trade setup. Number 1, entry. You enter on the break of the wick of the candle that closed inside the range. For a long trade, wait for price to break above the wick of that candle. For a short trade, wait for price to break below the wick. This ensures you are entering in the direction of the real momentum, not guessing. Number 2, stop loss. Place your stop loss just beyond the opposite end of the wick. For a long trade, stop loss goes below the wick. For a short trade, stop loss goes above the wick. This keeps your risk tight and protects you from false moves. Number 3, take profit. Target 2x your risk for each trade. For example, if your stop loss is 10 pips away, your take profit will be 20 pips. This keeps your risk to reward ratio consistent and allows your winners to outweigh your losers over time. That's it. Simple, mechanical, and easy to follow. No overthinking, no chasing candles, just a clear step-by-step process that works on forex and gold. So now that I show you my scalping strategy, where I take entries, where I put my stop loss, and where I take profits that I trade consistently. Now this is going to be the most important part of the video. I'm going to show the real trade examples on the charts and how I apply my scalping strategy. By the end of the video, you can trade yourself and make money. Alright, let's start with gold. Let's mark the first 4-hour candle after the market opens. After we mark the 4-hour candle, let's move on to the 5-minute chart, because we're scalping right now. we don't have much to do on the 4-hour chart. Here, price broke below the range low and then quickly closed back above. That gave us a long entry. Stop loss goes at the low of the breakout and take profits is set at 2x risk. As you can see, price hits the target, giving us a 2-hour profit. Later, price broke above the range high and closed back inside. That gave us a short signal with stop loss at the range high and take profit at 2x risk. Another 2-hour gain. Next, price dropped below the range low and then re-enter inside. A long setup. Stop loss at the range low and take profit at 2x risk. Price hits the target again. 2-hour profit. On the same day, price closed above the range high but then closed back inside. A valid short entry. Stop loss at the range high, take profit at 2x risk. And again, the target is hit. Later, price made a huge dip and re-entered the range, giving another long setup. Because the breakout was so big, using the range low for a stop would have been too wide. So instead, we placed the stop at the nearest key level, a small resistance. And take profit at 2x risk. Price hits the target perfectly. Another 2-hour profit secured. Price broke below the range low and then re-enter inside. Another long setup. Stop loss at the low, take profit at 2x risk. 1-hour loss. Price closed above the range high and then came back inside. Short setup. Stop loss at the range high, take profit at 2x risk. 2-hour profit. Moving to the next day. With the 4-hour range marked again, price broke below and closed under the range low. And then came back inside. A long entry. Stop loss at the low, take profit at 2x risk. 1-hour loss. Another long setup on the same day also hit its stop. 1-hour loss. No other setups formed for the rest of the day. So after reviewing all trades, we took 9 trades, 6 wins, 3 losses with a total gain of 9 all. About a 67% win rate on gold. Of course, this is just the basic version of the strategy. Backtesting a larger sample will give more accurate performance. But the point is clear. Even the simple version works and produces consistent profits. Now let's see how this strategy performs on the Forex market. I'm looking at GBP/JPY on the 4-hour chart. The process is the same as what we did with gold. So if you understood that, this will be easy to follow. First, make sure your chart is set to New York time. Then, identify the first 4-hour candle after the market opens. Draw a line at the high and low of that candle and extend both lines to the end of the day. This is your 4-hour range, which will act as your framework for the session. Next, we drop down to the 5-minute chart to look for potential setups. This is where the strategy comes alive. The first signal we got was price closing above the range high and then came back inside. That's a short setup. Stop loss goes at the highs, take profit at 2x risk. This one unfortunately hits the stop. 1-hour loss. But that's part of trading. We are showing wins and losses so you can see the strategy in real conditions. Shortly after, price re-entered the range, giving another short setup. Same rules, stop at the highs, take profit at 2x risk. This time it hits the target. 2-hour gain. Already you can see how quickly these opportunities form. Later that same day, another short setup develops. Stop loss at the highs, take profits at 2x risk. 2-hour gain again. Price then gave yet another short entry following the same rules and it hits the target once more. Another 2-hour profit. That wraps up today's trades. 4 setups in one day, showing how consistent this strategy can be. Price broke below the range low and then re-enter. Long entry. Stop loss at the lows, take profit at 2x risk. 2-hour gain. Price closed above the range high and then came back inside. Short entry. Stop loss at the highs, take profit at 2x risk. 1-hour loss. Moving on to the next day, we marked the 4-hour range again. The first setup was a long entry, stop loss at the lows, take profit at 2x risk. And price hits the target perfectly. 2-hour gain. Later, another long setup formed, same rules, and again it hits the target. Another 2-hour gain. After that, Price broke above the range but didn't re-enter. So no additional trades. On the following day, the 4-hour range was met, and price broke above the range high and stayed above, which meant no setups formed. This is the perfect example of why patience is crucial. Not every day will give you multiple trades, and the best traders know when to stay out. So after reviewing all trades, we took 8 trades on GBP JPY, 6 wins, 2 losses with a total gain of 10R. That's a 75% win rate, which is an excellent result for Forex using a simple mechanical approach. The key takeaway here is that this strategy isn't about guessing. You don't need complicated indicators or multiple time frames. By marking the range, waiting for the candle to close within the range, and following strict risk management, you can catch high probability trades that happen almost every day. And most importantly, you can do it consistently. Now, before we start trading this strategy, I want to make one thing very clear. I'm not guaranteeing this strategy will work on every Forex pair. Different pairs move very differently and price action can vary significantly. That's why it's crucial to backtest this strategy first on the pair you want to trade. Look at multiple days or weeks, calculate your win rate, and make sure it fits your style and risk tolerance. Only then should you consider applying it in live trading. If you learned something from this video, drop a comment below, reverse BINTI, and subscribe to the channel. Remember, consistency comes from testing, patience, and disciplined executions, not blindly copying setups. See you in the next video. Ciao, ciao.